Hello and welcome to this SVIC interview. I'm your host, Rahim Rahimtullah. Today we are diving into the high-touch world of Fintech. And helping us do that is my guest, Radhakrishnan NR. He is the head of the Fintech Practice at RapidValue. So, Radhakrishnan, thank you for being with us today. And I just want to start. So RapidValue is a digital solutions and service provider. You personally are working in the fintech space. So just tell us a little bit about your work in the area it concerns. As I understand, you work with established banks and some of the younger fintechs as well.
Mm-hmm. Absolutely. So hello, everybody. Thank you for getting me online for this interview. So RapidValue is a company that started about 2009. It started as a mobile development company. At that point of time is when Apple launched its first iPhone. So we started as a mobile app development company. From there, we've always been on the forefront of the innovation. We have been focusing on the fintech for the past 3 years or so. So I joined RapidValue 4 years back. I've been largely focusing on the fintech practice. In the last 3 years, we started with experimenting something new, which is going to be the forefront of technology. And we continue to do that even today. So we have been investing a lot of money in the technologies like robotic process automation, artificial intelligence, the legacy modernization technologies such as cloud, mobile applications, and so on. So that's how we started. We were a startup. Now we have become we're going towards a mid-sized company, and we are continuing to grow in a bigger way.
Thank you, Radhakrishnan. So, and tell us what you see today. You say you've been in fintech for about three years, and so tell us a little bit about the landscape of fintech today. So, I mean, one characterization that I could give would be to say that fintechs are disrupting the established institutions, and those established institutions are playing catch up to some extent. So I'm thinking here of banks like N26 and Monzo, and these are online-only banks. Everything runs through the app. They do online video ID verification. And it gives a really nice user experience, very clean, very seamless. And so I'm just wondering what you think. Is it fair to say that those kinds of experiences coming from these fintechs, they're setting a new standard?
Absolutely. I agree with that. So every different industry within the fintech, if you look at payments, there are a couple of companies who are doing the benchmark, and they happen to be the startups. For banking, as you said, N26, Monzo, a lot of other companies are there who are setting the benchmark for the big companies to follow. Investment area, there are a lot of other companies. If you look at the transfers, TransferWise is one of the company which has set the benchmark for the transparency in transfers across the global currencies. So companies like this have started a few years back, and they have been setting a really big benchmark for the other companies to follow. The bigger companies are catching up right now. So if you look at companies like Fidelity, Chase, Charles Schwab have started the robo-advisor or robo-wealth management in the past few months. So they already have the big client, the client base with them. So all they need to do is transfer or transition towards what the customer is looking for today. The bigger consumer base for all these companies are the millennials. And I think it's time for all the big financial companies to adapt to what the customers are looking forward to, and that is digital.
And how well is that understood by the big banks? Are you confident that they will be able to implement these sorts of measures?
Absolutely, they are. The problem with many of the companies, especially in the mortgage industry, they have all the homegrown applications. It's been legacy applications. Most of them are proprietary applications which has been built in-house. These have been largely non-scalable, and these companies are looking forward for the ways to scale them up, make changes. Some of these examples of robotic process automation is helping them a lot to retain the legal system, but to scale up in a different way. So I think every company is now looking, all the companies that we are talking to and we are reaching out to, the companies which are reaching out to us, they are asking for, first thing they're asking us is how can we modernize our legal system, or how can we think about doing, making our software intelligent? How can we do chatbots, so things like that. So it's pretty interesting space to be in. Everyone is very conscious about the technology that's happening today, and the future is going to be the technology. So every company is turning to become more customer friendly.
And one of the things you mention on the RapidValue site is that you talk about how, a little quote here is that you say, to stay competitive in the digital world, financial services firms need to provide high-touch services across all channels. And so I think this is a little bit of what you've been talking about with robotic process automation, chatbots. But just tell us, if you can, a little bit more. What makes something high-touch, and how does that work?
Mm-hmm. So, yeah, there are a lot of different ways a financial services company has been reaching out to their customer base. For example, if you have been looking at the insurance industry has been traditionally reaching out to their customer base through an agency or a broker. Today, they are changing the way it's been operating. There's a significant shift from how they have been reaching out to their customers. Now, the digital channel has opened up a lot of opportunities for them, specifically the mobile apps that they have today. So customers are finding it easier to go to their website, fill up an application form, and get it approved, rather than trying to talk to an agent and get things done. But having said that, even today, a lot of their business comes through agents. So they're making changes in that area too. A couple of companies that I have spoken to and worked with, what they're doing is they're creating an agency management application, something similar to an enterprise application. What they're doing is they have created their own application and they have given to all their agents. So the agents who are working on them, it's like your sales combination of your Salesforce plus an ERP. So they enter their sales on a daily basis. The company has a complete transparency of what their agencies are doing, where they are doing, what they are doing, how they are doing, and what is going to be the sales for me in next 6 months, next 1 year, what's the visibility for me. So I think a lot of transition is happening. A couple of companies I work with, the agency, when the agency or the aggregators who are selling the business for the insurance company, they've integrated that business, the onboarding process, into their website. So anybody who's going through any channel can go into the company website and give their the policy number and register themselves and do a self-servicing by themselves.
And so this is all about digital processes and about using data, I assume. What role does that play for you? Big data and being able to analyze the data and act upon the data. How important is that?
I think it's very, very important, especially the way we are going. We're talking about the artificial intelligence. Data plays a very crucial role. You need to know your customer pretty well. It's not just about having a record of the policy number and what policy he has. It's larger than that. It's more than that. Identifying your segmentation, what your customer is trying to do, what your customer has been spending on, what's the interest of your customer, what is it trying to do, what is his financial profile, what is business lifestyle. Understanding all of that has become the basic requirement today for the companies. And when the company is aware of that, they can sell pretty well. And it's not just about selling pretty well. It's also about the risk management and fraud and analytics. So a company which, for example, a loan company which needs to understand its customer has to know what's the lifestyle of the person, is the person really what he is presenting himself as. Same goes with the insurance industry. So a lot more in stake than what it has been. The stake has always been the same from the past. It's just that companies are now can be well equipped to do it more in a forefront way rather than doing it in a retrospective way.
And what's the role of artificial intelligence here? Because I know in the insurance industry, particularly, you do get use of chatbots, for example, so that customers, if they want to find out information, they can just talk to a chatbot and get that out. I mean, what role do you see artificial intelligence playing in this, in building up this picture of the customer and understanding the customer and interacting with the customer? Is there a role there for artificial intelligence, or is this still something that needs to be done by humans?
So if you look at like 4 or 5 years back, when you talk about chatbots, even it's happening in some of the companies today. So when you ask a question, you have to ask in a very specific format, like what is the balance in my savings account? You cannot change any word of that. If you change that, it's going to say, I don't understand what you're saying. So the problem was a specific question was defined and the specific answer for those questions were defined. So it was largely used to address the mundane questions, which customers used to call up the call center and ask. Today, things are changing a lot with the maturity of the technology that's been developing with Google, DeepMind, and all those new technology that's coming in place. They've also been using a lot of data and having their technology growing a lot. It's matured to a good extent today, which can understand the natural language processing. There are a lot of startup companies which are also working on this natural language processing. So if you look at those things, you can ask any question in any which ways you want. Everybody has their own native dialect. Americans speak a different English. The British speak a different English. The rest of the world speak a different English. So this is able to understand the different dialects. It's able to understand the way they're asking the question, what they're trying to ask, and it is able to present the right answer. So the most popular used technology today that we see are the Google Assistant, Siri, Cortana, all those things, which is being used in our customers' life a lot. So this is being transferred more into an enterprise version, which is called as a chatbot. So if you look at a chatbot, it is not just about what you're typing and what you're getting an answer. There's a lot of things that goes in the back end. So you have to feed in a lot of data for the chatbot to understand the question and come up with the right answer. Gone are those days where you're just asking what is my savings balance, my savings account balance, and it just says it's the balance. Today, customers come up, since the product also is getting complicated, customers also come up with complicated questions. So there are two ways to deal about these questions. One, you feed as much information as possible into your system and top it up with an artificial intelligence. So what the artificial intelligence does here, more than getting your data and looking at matching up with your question, what it does is it understands, it self-learns itself by the question that the people are asking, and based upon the answer, it is based upon the conversation that happens between the customer and the bot. The artificial intelligence learns itself and makes the answers better day by day. What it also does is when it sometimes when the question is too complicated, it can direct it to a human customer service executive. The customer service executive gets to see the complete conversational history and will be able to understand what exactly the customer is looking for, and he'll be able to respond immediately without losing a track between what happened with the conversation bot and with the customer service representative. So the customer, it's all about getting the customer experience seamless.
And do you recommend today that banks and other financial institutions, insurers, and so on, that they should take up this chatbots and artificial intelligence technology? You think it's at a stage today where it does provide some positive impact on the customer experience?
I think they're already doing. A lot of companies that I've been speaking to, the first thing they come up with is how can we use the artificial intelligence to make our things better? It's not just about chatbots. Let's talk about the underwriting system, which is the core functionality of any insurance company or a mortgage company. So if you look at the underwriting process, we have worked with a couple of companies where they have implemented the artificial intelligence in their underwriting process. So technically what's been happening is like about 60% of their underwriting process, it's been built with the rules engine, and the 40% of them are going to the manual underwriter who sits there, look at the information, and then responds back. So we rebuilt the complete underwriting system. What we also did is when it goes to the human underwriter, he looks into the system, and based upon the action he does every time, the system learns by itself. It learns at what situation is this person responding this, what's happening in there. So the system learns by itself and makes modify the rules accordingly. Over a period of time, this 40% of manual reduces to 20% and then reduces to 10%. So in a lot of different other ways, companies are finding that the artificial intelligence to be very effective to them. It's not just about chatbot, not just about understanding the customer. Within the enterprise also, there are a lot of ways the companies are finding the artificial intelligence to be very useful for them.
And does the artificial intelligence in cases like that, where the task, well, I don't know, would you say the task is therefore more complex? I mean, in the underwriting, for example, as opposed to chatbots, is that a more complex operation?
See, I think both of them are equally complex. So if you look at chatbot, as I said, it's not just about the conversation, right? It needs to be integrated with the complete enterprise platform to understand. So there are a couple of companies which we worked with. They want to understand for example, onboarding a new employee. He can just call a chatbot and ask, hey, do you know where my laptop is? When will I get my laptop? What is my leave policy? Things like that. So it's all about integrating the complete system, getting the data into one place for the system to understand and process it and give you the right answer. So that's what artificial intelligence is doing today.
And so in the case of, for example, underwriting, what's the experience of the sort of error rate, if you will, compared to humans? I mean, does AI, do humans, do they sort of make mistakes at the same rate? Is one sort of clearly better than the other?
Good question. So it learns from the human. So it learns from the human action. So a human can process multiple things at the same time. If you're saying this is the income of the person, this is the region of the person, this is where he is working, these are his food habits, these are his personal behavior, and all those things. You can look at all those things and then come up with a solution saying, okay, I find this guy to be less risky for the company, let's go ahead and process his insurance. Or I find this guy to be in more of a adventure sport, and I find it's pretty risky for me, so let's not go ahead and process the insurance. So some of these things can be defined by rules. Some of these things cannot be defined by rules. So things which cannot be defined by rules is being learned from the human actions. And it does not happen like with a 10 or 100 times the same person is doing. It happens over a period of time. You cannot have the system learn with just 10 instances or 20 instances. The system will learn from like 1,000 instances. It exactly knows what needs to be done because different people acting for the same situation at different point of time, what they are doing. And that's how the system learns. So if you look at from that perspective, in a way, I would say the system is better because it's learned from like 5 different people and knows exactly what needs to be done at a certain point of time. So the system at a point of time will do a better job. It doesn't give the importance to the individual thought process or the momentum, whatever human error happens, right? So
Sure.
the system does not take that into account.
Sure. I mean, one thing that is sometimes talked about with artificial intelligence, a potential drawback, or rather perhaps something to be aware of, is that we can teach it biases. So our human biases, right, which we see, the AI learns those and then would repeat those. I suppose in this sort of scenario that you're describing, that kind of thing could happen. I mean, things like underwriting and issuing loans and mortgages, these things have obviously serious real world consequences. And therefore, we have to, I suppose, have to be aware on some level about how these decisions are made. So if they're being done by artificial intelligence, we might want to sort of be able to dissect that a little bit and know how and why it came to a particular conclusion.
Right. Exactly.
But one other thing I know you've talked about in the past, Radhakrishnan, is about how robotic process automation for an enterprise can replace humans. So you can, have one, I suppose, machine replace the work of
Humans, yeah.
up to five people. So just tell us a little bit about that. What do you feel are the consequences, positive and perhaps negative, for an enterprise when it enters into that sort of area?
Okay. So if you look at the robotic process automation, there's three levels of robotic process automation. One is more of a transactional, which just mimics your UI instances that you're doing on the system and then does what exactly a human will do. The second one is more of a cognitive RPA, which is more defined by the rules. You can provide the rules to them. It not just takes the information from a text and do a OCR stuff. It takes the information from there, and you have a set of rules that you are going to define. So X is going to be Y, then process it. If X is not equal to Y, then don't process it. You are setting a different set of rules everywhere. So it takes the rules, understand what is it, and then process it. This is more of a cognitive processing. The third one is the intelligent processing, where you are going to top it up with an artificial intelligence. So you're going to say, don't just mimic what the people are doing, don't just follow the rules. You also learn from what is there in the data and accordingly amend the rules and then go ahead and process it. So that is something more of a closer to human intelligence, but not human intelligence. So if you look at it, there are a lot of processes, especially in the financial industry. RPA is best suited for the financial industry. So if you look at the financial industry, there are a lot of processes. For example, KYC, know your customer. The simple process is that you're going to submit a document. When you submit a document, there's going to be a few people who's going to look at the document, going to verify that, for example, address verification, right? So I have the application input into the system, and I'm going to submit a document for the address verification. So human is going to sit in front of the computer and going to look at both the application and the address document and going to see whether they are matching or not. If they are matching, they're going to go and update into the database. So if you look at the larger organization, it's not just one team that's going to do that. There are different teams who are, adhere to do all this different process at different point of time. So what the RPA can do is you can use the OCR system to get the text out of the images that a person is sending, and it can compare that information with the application that's been submitted, and it can go ahead and update into the database if everything is found to be matching. If something is not matching, you can again describe different actions that can be done. You either send the email to the person saying, hey, everything matches, but your zip code doesn't match, your PIN code doesn't match. Can you send me a different documentation? Or everything matches, your date of birth doesn't match. Can you send me a different documentation? Email is one way. There are a lot of other ways. You can even do a robocalling, call up and say, hey, we have found this. Can you do this? Or even a texting, right? So anything that can be done as an action point. And when the person sends back that information, the RPA is capable of getting the information and exactly matching with the application form which you had submitted initially, and will be able to process that information and then go ahead and do the next level of steps.
And so there's potentially a lot of efficiencies there to be made. And I mean, what about for an enterprise? They could would they then find themselves with a lot of extra human labor workers who are freed up then as a result of bringing in RPA?
Absolutely. So it's not just about freeing up human labor. It's a lot more than that. You can obviously, the RPA can work 24/7. You cannot, so it doesn't have a stipulated 8 hours of work hours. So it can work 24/7. It can be triggered by itself, or if somebody can trigger it to do a batch running. Anything can be done. So it can run 24/7, and there's the error. If you look at it, the error rate is going to be way too less, and the investment also is not that big. If you look at the investment versus the return on investment, there is a return on investment is very quick when it comes to RPA. So the few companies which we have worked with, the return they've seen the return in just 3 months. From 300 people, they reduced it to just 100 people in just a matter of 3 months. And that's a huge return to the company.
Absolutely. Well, Radhakrishnan, we're almost out of time. So I think just as a final question then, it sounds like would that be your main recommendation though? Would that be your main recommendation then today to financial institutions is to get on board with RPA and with artificial intelligence? Is this where you see the future going, or is there perhaps another technology which we even perhaps aren't applying yet, which you see further down the line is going to make a big difference in fintech?
So a company should not be going with what is the in technology that is today. There's always a gap. So like 5 years before, company was saying that I need to be on the social media no matter what. So today they're going to talk about RPA and artificial intelligence. I think it's not should be the way that how the company should think. A company should be thinking like what is their existing technology today and what they need to do to be on top of the business. So it's not just about you cannot go to artificial intelligence if you're having the legacy systems. You need to first modernize the system. You need to bring in data lakes. You need to bring them into the cloud. A lot of things needs to be done. So a lot of other underlying technologies the company need to look at, and they have to take a decision which is going to be more scalable for the company. Like 5 years down the line, this is what I see myself. So what do I need to do? That's the first question they need to ask themselves. And that's going to lead them to the roadmap of what needs to be done. Sure, artificial intelligence is the way to go. Every company, every industry is going towards that, and that's what going to rule us 5 years down the line. And 5 years is too far. I'm going to say like 2 years down the line, that's what going to be everywhere. So for sure, that's the way to go. But first, you need to assess what you need to do for your company before jumping onto any technology.
Fantastic. Well, Radhakrishnan, thank you. That's sound advice, I'm sure. So, we really appreciate you taking the time today to join us. And unfortunately, that's where we'll have to wrap things up for today. But thank you very much for being on the program.
It's my pleasure. Thank you so much.
And to the viewers at home, thank you, or in the office, I should say, thank you for tuning in and joining us today. I just want to say that if you are interested in continuing the conversation around fintech and you want to see some of this in action, then do check out SVIC's Navigating Fintech Disruption Executive Immersion Program. That's happening in Silicon Valley. The next run of the program is going to be next year, February 11th to 15th. So be sure to have a look at that on our website, siliconvalley.center. But for today, that's where we will wrap things up. So thank you again very much for joining us. And from me and from my guest today, Radhakrishnan NR of RapidValue, goodbye.
Thank you, everyone.